Your credit score is a crucial indicator of your financial health, influencing your ability to secure loans, obtain favorable interest rates, and even impact job opportunities. Today, we're going to dive deeper into actionable steps you can take to boost your credit score and achieve greater financial success. Credit scores are three-digit numbers that lenders use to assess your creditworthiness. Ranging from 300 to 850, a higher credit score indicates lower credit risk and vice versa. While this numerical value is essential, it's equally vital to understand how credit scores are calculated. Factors such as payment history, credit utilization, credit history length, types of credit, and recent credit inquiries all contribute to your credit score. For instance, having a consistent track record of making on-time payments positively impacts your score, while late payments can significantly lower it. Additionally, the length of your credit history and the mix of credit types you have also play a role. Understanding the specific weightage of each factor helps you identify areas for improvement. For example, you may realize that opening multiple new credit accounts in a short period has a negative impact on your credit score. By understanding the underlying mechanics of credit scoring, you can make informed decisions to build and maintain a healthier credit profile. Before diving into the journey of improving your credit score, it's essential to assess your credit report. Your credit report is a comprehensive record of your credit history, including details of all your credit accounts and payment history. You are entitled to a free copy of your credit report from each of the three major credit bureaus, Equifax, Experian, and TransUnion, once a year. Carefully review this report to check for any errors or inaccuracies that could be negatively impacting your score. By examining your credit report regularly, you can identify potential issues early on and take steps to correct them. For example, you may discover an account that doesn't belong to you or a reported late payment that was, in fact, made on time. Disputing and resolving such errors can lead to an immediate improvement in your credit score. Payment history is one of the most critical factors affecting your credit score. It accounts for a significant portion of your overall score and reflects how consistently you make on-time payments. If you've missed payments in the past, it's crucial to address this issue proactively. One effective strategy is to set up reminders or automatic payments to ensure you never miss a due date again. Many banks and credit card companies offer email or text alerts to remind you of upcoming payment deadlines. In case you encounter financial difficulties that make it challenging to make timely payments, consider contacting your creditors. Explaining your situation and seeking alternatives, such as a payment plan or temporary forbearance, can help you avoid further damage to your credit score. It's essential to maintain open lines of communication with your creditors and be honest about your financial situation. Many creditors are willing to work with you to find a suitable solution, as they prefer getting paid over not getting paid at all. Credit utilization refers to the percentage of your credit card balances compared to your credit limits. A high credit utilization ratio can negatively impact your credit score, while a lower ratio is seen as a positive sign of responsible credit management. To effectively manage credit utilization, start by paying off high balances first. Reducing the amount of debt you owe can significantly improve your credit utilization ratio. If possible, aim to keep your credit card balances below 30% of your available credit limit. Another strategy is to request a credit limit increase from your credit card issuer. By doing so, you can lower your overall utilization rate, assuming you don't increase your spending. However, remember that a credit limit increase may result in a hard inquiry on your credit report, which can temporarily impact your score. If you find yourself struggling with debt, dealing with creditors and debt collectors can be a challenging process. However, ignoring the situation won't make it go away and can lead to further damage to your credit score. If you're facing financial difficulties, reach out to your creditors to discuss your situation openly. Many creditors are willing to work out payment plans or provide temporary relief if they see that you're taking the initiative to address the issue. When dealing with debt collectors, it's essential to understand your rights under the Fair Debt Collection Practices Act. This act provides guidelines on how debt collectors can interact with you and limits their ability to use unfair or abusive practices. While it's natural to feel overwhelmed or stressed when dealing with debt, communication is crucial. Be proactive and honest about your financial situation, and explore potential options for repayment that align with your capabilities. In some cases, it may be possible to negotiate with creditors to remove negative items from your credit report once you've settled outstanding debts. This process is known as pay for delete, and while not guaranteed, it's worth exploring with your creditors. Building positive credit habits is a key step in improving and maintaining a good credit score. Responsible credit management involves several practices that contribute to a healthier credit profile. Consider becoming an authorized user on a responsible friend or family member's credit card to start building credit. This arrangement allows you to piggyback on their positive credit history, potentially giving your credit score a boost. Responsible credit use is another crucial aspect of building positive credit habits. Borrow only what you can afford to repay, and avoid maxing out your credit cards. Aim to keep your credit card balances low, as high balances relative to your credit limit can negatively affect your score. Additionally, be cautious when applying for new credit. Each credit application results in a hard inquiry on your credit report, which can temporarily lower your credit score. Applying for multiple credit accounts in a short period can raise concerns for lenders and potentially harm your creditworthiness. Maintaining a diverse credit mix also plays a role in your credit score. A mix of installment loans, such as car loans or student loans, and revolving credit, such as credit cards, can demonstrate your ability to manage different types of credit responsibly. Finally, it's essential to keep older credit accounts open. A longer credit history can positively impact your credit score, as it provides more data for creditors to assess your creditworthiness. However, avoid opening new credit accounts frequently, as too many inquiries within a short period can lower your score. As you put effort into improving your credit score, it's crucial to regularly monitor your progress. Monitoring your credit helps you track changes in your credit report and score, giving you insights into the impact of your credit building efforts. Use reputable credit monitoring services to stay updated on changes to your credit report. By keeping a close eye on your credit, you can identify positive changes resulting from your efforts and address any issues promptly. Regular monitoring also helps you detect any signs of identity theft or fraudulent activities. If you notice any suspicious activity on your credit report, take immediate action to protect your credit and personal information. In addition to credit monitoring services, some credit card issuers and financial institutions offer free credit score tracking tools. These tools allow you to view your credit score regularly, giving you a sense of how your financial habits impact your score over time. Congratulations on taking the initiative to improve your credit score. Remember that building and maintaining a good credit score is a journey that requires consistent effort and responsible credit management. By understanding the factors that influence your credit score and implementing the tips we've discussed today, you're well on your way to achieving better financial health. Use the valuable insights from Credit Repair Kit for Dummies as your guide to navigate the world of credit and achieve your financial goals with confidence. Thank you for joining us today, and we wish you the best of luck on your credit building journey. Always remember that informed financial decisions can open doors to a brighter and more secure future. As always, if you found this video helpful, don't forget to like, share, and subscribe for more valuable content. Happy credit building! This video is for educational purposes only and not credit repair advice. Consult with a qualified financial professional for personalized credit repair solutions.